Welcome back everyone to another video here with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video, helps out the YouTube channel, and lets me know you appreciate the time and effort I put into making these videos. So here we are with a video. I want to talk about a stock that has been extremely oversold in a matter of minutes after earnings, and they even beat earnings. Now there's some key takeaways in the earnings that created this overreaction, in my opinion, and I want to share with you guys a stock that has become a huge opportunity to be aware of and watch closely throughout this week and moving forward. But before we jump into it, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And if that's something that interests you and you want to get in on early on opportunities like these, you're more than welcome to join us. Check out the link down below in the description to the Discord, and by joining you'll become part of a growing community of investors all looking to learn and grow together. So the stock I have for you guys today is one that could be explosive just based off analysis ratings. We're gonna break it all down. We're gonna get right into it. So the home run of the day was spectacular and beyond expectations, and if you want to become part of this and you're interested in joining and getting in on early with us every single morning, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors all looking to learn and grow together. So here we are with the stocks I mentioned this morning, ARTL, USWS, and both of them gave us 5 to 10% jumps from their lows and their spikes. But the home run of the day turned out to be ARTL, and in a matter of minutes in the pre-market and even after the bell, it gave us a highest point of 20% plus. I mentioned it as it was starting to pick back up steam in the pre-market around 105, 110, and then it started to take off really fast in the pre-market, giving a 10 to 20% move, came back down towards 110 and took off again to 128, came back down and did it again all the way back up towards 132. So from the moment I mentioned it, it gave us a highest point of 20% plus. But in both of these runs here, or actually all three, right, in the pre-market and the two after the bell, it gave multiple opportunities of 5 to 10%, 10 to 15%, and 10 to 20% in this whole entire run. So this is what we strive for every single day. With 42 Vision, we have the clarity to see the strengths and the weaknesses in the charts, and you can gain access to this as well by joining the 42 Vision tier level. The link is down below in the description to the Discord. We look forward to having you join us, and let's jump into these charts. So the stock I have to share with you guys that you do not want to overlook, it's in the technology sector. It is a growing sector and it has so much growth ahead of it, especially when it comes to the amount of revenue in this company's pockets every single quarter, to the point that they just beat earnings and it fell. It was a huge overreaction. We're gonna break it down on why this overreaction happened and how it's actually, in my opinion, just an overreaction. Now this is a stock I mentioned on a weekly watch list not too long ago as it was pulling downwards. In that week, last week, it hit $57, and from that low going into today's highs, it nearly gave a 5 to 10% move in a matter of just a few days. But after earnings, they had some key things that made it fall, even though earnings was beat, guys. Earnings was beat, and that was very interesting to see this overreaction unravel and play out. And based off of 42 Vision alone, this looks like a huge opportunity based off of the overextended weakness this chart has. If you go ahead and zoom in even more, weakness, zoom in even more, weakness, you could just see it slowly trying to consolidate and find a bottom. It hasn't found it yet, but it just continues. And when you go over to the 1 hour, extreme weakness, and when you go over to the 4 hours, extreme weakness on one single candlestick. Now it's been showing extreme weakness in this area. I had been watching it, and then I finally saw an opportunity going into last week where it would possibly slightly bottom out, and it certainly did that, and it went up about 5 to 10% to the highest point of $63 from 57, and then today it has collapsed. Now The point of this is that at this point, and I'm going to show you guys on a 1-minute opportunity just so you guys can see how 42 Vision works. When you start seeing these overreactions, right, of extreme weakness on 42 Vision, it finds an area to consolidate, and when the reversal starts of red candlesticks with green borders, dark green, and goes into green, you're gonna see a move of at least a few dollars or a few cents, depending on the volume and volatility of the stock, to push to the upside. And why is this a huge opportunity right now after hours? Well, it's been extreme weakness all throughout. It's been trying to fight to come back up. It's going to newer lows. It hasn't found a bottom, and tomorrow is going to be the day to be watching this very closely to present itself as an opportunity. And we could see eventually, whether it's tomorrow or a few days from now or a week from now, a reversal with strength once this gets weathered through and a lot of people start realizing, well, even though some things did change and that were stated at that earnings report, earnings was beat, and that means that revenue is growing, and eventually the net income is going to turn positive. It's been weak for the last several years. It has been negative, but since this is a growth stock, this is not measured on how much revenue it's actually making of profitability. If not, how much closer is it getting to become profitable? And every single year, the net income became smaller and smaller, implying growth. And this year, they're implying some growth as well. But it got hit hard because of what they think in quarter 4. We're going to break it down in this video, and I'm going to share with you guys what analysis ratings are rating this moving forward, and they have not even slashed their analysis ratings just yet. That is something to watch going into tomorrow and the next few days. So after beating earnings, one of the key things was the education industry is experiencing a slowdown, the Chegg CEO says, as the stock has tanked. I believe this is creating an overreaction, an opportunity, and it's something to watch closely, right? I don't want anyone to rush into anything. You want to do your further due diligence and understand, and this is my opinion alone. It's not financial advice, but where it stands, it's looking really interesting because it's just a slowdown that everyone was expecting. I mean, there's slowdowns all across the board in every single industry, and everyone's blaming it on the COVID-19 pandemic. Now, if you are a long-term investor and you believe in the company's growth and more users using it over time, then that is something that you need to look at and say, well, this could be an opportunity once it gets through this hiccup and COVID-19 pandemic is no longer an issue. And if they've been growing their revenue and they're beating earnings, well, it's a profitable company, or it's on its way to profitability, right? So they go back and say, well, things are hurting it now. And then also we had a huge uptick when the COVID-19 pandemic, which is kind of like ironic. The COVID-19 pandemic is holding us back now, and then COVID-19 really pushed us forward at the beginning, which is something that I'm noticing a lot of companies say, and it's just correlating all across the board in different words in different ways. Now, it states that it became clear to us that the education industry is experiencing a slowdown that we believe is temporary. And this is where this all results as a possible overreaction. It's trying to find a bottom. Once it finds it, I mean, we could possibly see this reverse or have some strength going even into tomorrow alone, right? Or even into the week, right? The rest of this week in the first following days after this announcement of these earnings, even though they were beat. You can see it here, the surprise 0.01 and 0.01, even though it seems small, it's a huge amount. And when you look at everything here, their financials are looking strong and everything about it is showing strength. Now, the only thing is that they slashed their forward guidance for the year. And this is where it actually becomes an issue, that it's making it come downwards. But the stock has fallen from these highs up here of $63 all the way down to $45 of nearly 27-30%. And what they slash, really, this is where it becomes an overreaction again, is just about 10%, or actually less than that, right? Because they brought it down from 805 million, 815 million, and the estimate was about 812 to 762 million to 764 million. So when you really do the math there, I mean, this is less than 5% of full year revenue of growth year over year. And when you really look at it, last year's revenue growth was around 644. The year before was 400. So the year before that was 300. So the company is growing. I mean, it's still $140 million of growth. And if they can become actually profitable or become closer to zero in net income negatives, that's going to be a huge sign for the forward outlook of this company. This is like a once in a long time. I'm not going to say once in a lifetime because that's not true, but once in a long time opportunity that does not happen every single day. I'm not saying that right now, which on the one day we don't have a clear picture yet. Things need to actually populate and see what happens, because this is pulled down way below here and has come way down here closer to the mid area of this run from way back here in March 2020. I mean, it's only 50% above the levels and the lows of this stock in March 2020. I mean, this is going to be huge for those looking for a value play or opportunity long term, or even a short term quick play on the bounce back if there's a dead cat bounce. But when you really look at this and this huge pullback and extreme weakness here on 42 vision, I mean, like I said, this is once in a long time opportunity to see a stock fall that much. And it's a growing opportunity. It's a growing stock and company, and expanding and getting close to becoming profitable. I mean, once it reverses, it's just going to be twice as strong, especially if it gets through this temporary setback, right? They're stating that this experiencing this slowdown is a temporary one. And I think it's going to be huge moving forward. I look forward to seeing your thoughts down below. And if you do the math here, this does not add up to the amount that the stock has pulled down. It's pulled down almost 3 times that, also presenting itself as an opportunity. And when you look at the analysis ratings here, they're all pointing to the upside. This hasn't even refreshed, so it's not even 59% from here. It's actually nearly 110% from these levels. And the low end is still nearly 50% plus, and the high end is nearly almost a total of 150% to the upside. As always, thank you guys so much for watching, and let's make some